In the final video of the module devoted to governance and ethical issues associated with financial management, we turn our attention to the environmental aspects of business activity. In recent years, the damage caused to the environment by humans has become one of the most critical issues facing the global community. Most scientists today agree that emissions caused by carbon-fueled business operations contribute to the change observed in the planet's climate. That is why more and more emphasis has lately been put on the impact that business activity has on the environment. The idea of environmentally responsible business is embodied by the concept of sustainable development, which is defined by the United Nations as development that fulfills the needs of present generations without compromising the ability of future generations to meet their needs. This definition implies that when running a business, managers should focus not only on economic performance, but also on its social and environmental impact, which ought to become an important part of corporate policy. As we already mentioned, one of the most significant impacts of business activity on the natural environment is the emission of so-called greenhouse gases, such as carbon dioxide, which contribute to the warming of the Earth's climate. The Kyoto Protocol, adopted in 1997 by 160 countries, which came into effect in 2005, set targets on greenhouse gas emissions applicable to individual countries, with the aim of reducing the global emission of carbon into the atmosphere to 5% below the level from the year 1990 by 2012. The Kyoto Protocol introduced a market mechanism to support the reduction of emissions referred to as carbon trading, under which countries issue emission permits to business entities, which can subsequently be traded in the market. As a result, companies can decide whether they prefer to invest in new, low-emission technologies or to spend money on the purchase of additional emission certificates. What is more, many countries have set up their own environmental authorities with the goal of regulating and controlling the impact of business and its activities on natural resources and the environment. In particular, environmental authorities ensure that companies comply with domestic and international environmental norms with respect to the use of sustainable energy sources, recycling of waste, and protection of natural resources. In the UK, these tasks have been assigned to DEFRA, which stands for the Department for the Environment, Food and Rural Affairs. In order to enable companies to inform stakeholders about their approach to the issue of sustainable development, a system referred to as Triple Bottom Line or TBL reporting was developed. TBL is a reporting framework which requires that companies disclose not only how they create economic value, but also how social and environmental value is generated. This means that in order to comply with the TBL principles, companies have to prepare additional reports on social and environmental issues alongside traditional financial statements. This obviously requires setting up appropriate management reporting systems, enabling the capture and processing of relevant information, as well as ensuring that the information disclosed is true and fair. A possible way to ensure that the data which companies collect and process on the environmental impact of their activities is of satisfactory quality is to apply a framework provided by the ISO 14000 international norm. ISO 14000 is a family of standards which provide companies and organizations with practical tools to support the management of their environmental responsibilities. Among others, ISO 14000 requires companies to periodically audit their environmental management systems, thus ensuring that information disclosed to stakeholders is of sufficient quality. In particular, an environmental audit performed in accordance with ISO 14000 provides an assessment of whether the company complies with laws and regulations related to environmental obligations, as well as whether it acts in accordance with statutory requirements in this respect. An environmental audit additionally provides a tool for management to effectively control the environmental practices of the company. Other benefits of implementing an ISO 14000 framework include increased ecological awareness and commitment of the company's personnel, as well as an improved image of the company in the eyes of the public.